We got a good ADP number this morning. However, that was offset by the ISM that wasn't as pleasant. I'm here with Ken Polcari from iCap Equities. So, it's been a lot happening this morning, even though there's not a lot of participation in the market. We've had all this global bank easing, and then on top of that, our economic data. The thing that concerns me, though, is this ADP number seems to really start to diverge from our government's numbers, and it's hard to get a read on where we're at with employment.
Right, and you have to be careful, too, because a lot of times we'll see ADP will come out with one number and everyone will get excited, and then the non-farm payroll number will come out, 2 days later or a day later, and it completely misses the mark. And so, therefore, it's frustrating for investors because they don't, like you said, you would expect the government report to be more influential, or at least the one that would encourage, the one to be more encouraging. And, in fact, we haven't seen that recently. So I think you have to be careful. You certainly have to be careful this week because it's a shortened holiday week. And the movements will be volatile because there's lack of participation. You can't read too much into it. We've seen the market rally 3.5% in a week, really in anticipation of what the ECB was going to do, what the Bank of England was going to do. They came in right in line. I think the real kicker this morning was the unexpected rate cut in China. And we saw the market have an initial surge higher, but then it really started to kind of take in. What does that mean? What it really means is that the global economy is not getting any stronger. And if China unexpectedly cuts rates, means that, they perceive a problem in their own economy, which then kind of, extrapolate that out across the world. And that's why we're seeing the market pull back a little bit.
Right, because if these global leaders and if the PBOC finally kind of fesses up and says, yeah, things are not quite as good as what we wanted them to be, it really does kind of say the jig is up.
Well, that's right. That it does. And then the market's going to expect more stimulus. It's like the drug. All of a sudden you need more of the drug in order to get you to feel good. If they don't come through with a blockbuster plan, then you're going to continue to see this lethargy, this apathy in the market, right? And so you'll see us kind of churn. Now, once again, we're hitting our head right at resistance 1375, which is what a lot of kind of economists and strategists were saying that they wouldn't be surprised to see it pull back. My guess is, though, that next week there's a shot that they try to push the market to 1400 to test it again, and then we start our earnings. Now, earnings are expected to be soft. We already know that ahead of time. It's been well telegraphed. Companies have already come out and pre-announced if they're going to miss. They've already punished those companies. So beware that when they come out and they announce and they beat the new number, which is lowered again, that people will perceive as being positive. So, you have to, the market's got some volatility certainly built into it in the next couple of weeks.
All right, so we're going to keep our eye on that because, as Ken said, we got a lot happening, and it's pushing this market around. Very headline-driven market these days.
This market is fueled
Stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting